Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Thursday, and we're sitting here now at the 26th of June. Can you believe that June's coming to an end? Whoa, that means we're halfway in the summer from my perspective. 2025, and just getting out about 5:55 p.m. Central Time. All right, the stock market knocking on the door of, remember that song? Knock, knock, knocking. Great song. Knocking on the door of all-time highs, carrying the market with it, the euphoria that's going on. It's entered that stage of the fear of missing out, FOMO they call it, and you've got to pay attention to that. It will not help gold. The money will come out of the gold market in markets like this and typically move itself into here, because you'll say to yourself, well, why am I in the gold? The gold doesn't pay a dividend of any type. It's just a store of value. And I see right now that the war has just ended. If they can get Israel and in the Gaza out of a problem there in Ukraine, where's your world wars that we'd be involved in? The second thing the market's looking at, and I'm telling you, I started this yesterday, the market is looking over the horizon that the Fed's next move is going to be a rate cut. Now, that doesn't mean they can't stand still. I don't think they're raising rates. So it's either they stay as they are, but traders think the next move, not for the July meeting, but heavily for the September meeting, is a rate cut. I haven't joined that party yet. I just look at durable goods today. I look at GDP, all these numbers. I'm not seeing the weakness show up. So why wouldn't the Fed keep the policy that's working? So that's where I come from. Doesn't mean I'm right on it, but I do have a right to an opinion, and that's what I see. I see that hurting the dollar. Why? Well, the one thing that we want as a country is we're going to have these tariffs. By the way, today already through his press secretary said the president's considering what to do. He may extend those tariffs. How long have I told you that's what's going to happen? There is only one deal that the president has made, and that's with the UK. And a deal is a memorandum of understanding, not a signed, hey, here it is, signed, sealed, delivered. I'm in the music business today. But it's heaven, knock, knock, knocking on your door. Remember that? Well, to make a long story short, gold is knocking, but I think getting knocked is the better word right now. Energy's sort of stable, but I don't like it up here. I still think there's more room on the downside on the charts. Bonds and notes, why tonight would you get involved? You know the market's going to react to how they interpret how the Fed is going to react to the PCE index in the morning. Talking about that, you're going to get the personal income, spending, and the PCE price index data, one of the Fed's favorite tools, at about 7:30. They're forecasting it up 0.3 on the personal income side, and spending only up 0.1. That's not bearish. That looks pretty good. That's solid. University of Michigan, we're going to get the final, in this case, consumer sentiment number, and they're looking for it unchanged at 60.5. So we'll see if we get that one way or the other and get away from it. All right. So as I said, you look at these markets and you got to figure that even the break in the dollar is not supporting the gold. Without the war there, without everything getting better, is gold overpriced, or does more have to come out of it? Well, that's what we're going to talk about. If you look on the price through here on a weekly chart of just closes, not the highs and lows, you can fall all the way back and challenge at some point this 18-week moving average of closes, which is sitting at 31.97. The market for the week is down 1%. The market is not caved in. It is not a crash. That's not what I'm saying, and don't you read those words in it. It's that at 3,500 it was too expensive, and now it's coming down, and the market's got to search for where that right number is. So here you are down $34 for the week. On the daily chart, I don't see how you could say that this chart is bullish, or can you? Well, here's what you can say. The swing line turned up. You now have higher lows, higher highs. If you've taken my course on outside days, what you had in this chart now is today's trade was an outside day to the upside. You took out yesterday's low, Wednesday's low, and high, and closed higher. If you take that low out over the next few days, markets like to test support under the market before it goes back over yesterday's high. I look at those two numbers as very important. So the resistance, if you continue up without taking this down, is back at the 33.76 level, and I don't see anything right on the horizon to carry the market all the way to those highs. If you take out this low, in terms of moving averages, you've got support on the 100-day moving average at 31.96.5, but the Bollinger Band is down around 33.09, so that would be the number that I would think the market would want to go to. The bigger story is that you've gone sideways now. You didn't carry anything up. When you think about it, the U.S. bombed Iran. When is the last time we bombed a country like that? And gold got its glory up for a moment and has let all that gone, and the market's under it. So yeah, I can see a bounce in a market that has downside bias in it. It is oversold. I said this to you yesterday. I'm going to keep repeating it. I don't think it's ready to come out of this range. But if it did, if I had to guess which way, I'd say to the downside, not the upside. But I don't think it's ready. I think silver's going to gain on gold again, and that's what's going on right through here. Remember, I did that silver report, and we were doing that report up over here. And we had one heck of a gain on that. And now the question is this trade reigniting itself? So I'm looking at the market, and I see lower low, higher high. What else? I have a market that is already corrected in overbought condition, so it's getting ready, in my opinion, to be bought again. The question is, when will we get to set up on this chart? I don't see it yet. The market, I've warned you that you don't want to be short this market. I had never said to buy over a Bollinger Band. If it goes, it goes. That's fine. But I don't like what I'm seeing at the London Metal Exchange. A lot of these contracts are 1 and 2 day contracts. I know that sounds crazy, but that's what a lot of the traders do there. And when I'm looking at what's going on, there's really no product in their inventory to deliver from. A lot of that was sent abroad, America. Why? Tariffs. We don't know yet what the levy's going to be on copper, aluminum, steel, which are going to get breaks, which countries, which aren't. But those are what the president is deeming national security items, right? So you got to pay attention to that. And I think that's got the copper market into a frizzy, if you will. And it's overbought. I realize that. But a squeeze play comes out of nowhere. You got to pay attention. In the platinum, I got what I wanted. You hit. And I was telling my traders this morning that in my subscriber video that this embedded reading told me that I think we should come back up. I wish the smaller contract in platinum had volume. Maybe they have to do something to create a contract size, because the risks in this, when you buy it and you move $10 and you get $10 moves all the time, you were up 20 today, that's $2,000 at a shot. It takes the market and it hurts it too much. That's why you see the Chicago Mercantile cutting the size of contracts continually now, because they want the public in there to take the other side of the risk trade, and all of these things are fungible, so you can put contracts against each other in most cases. It's not always that way. They're going to have what they call a continuous futures contract. Perpetual's the word. And I don't know that that's fungible. In the dollar index, you're breaking out to the downside. So my dollar report that we did earlier in the year, 2 months ago or so, when we were talking, I think this market's coming down. We were at the 4th price count, if you'll recall. I then said, there's a shot. I don't know if we'll go for it. I've now climbed into the bed where I think we're going for the 5th price count. It's very rare. If it doesn't go there, I'll say, hey, didn't make it. But I was certainly not preaching to go short under Bollinger Bands, but I am preaching that I think the dollar is going lower. So you put that all together, you come up with a game plan. Why? As the dollar goes down, it affects so many things. In the Spiders ETFs, the products America sells abroad, well, they'll get tariffed by other countries. You can expect that that'll be the case. What will happen is if the dollar keeps dropping and you get a drop of 15%, 20% in the dollar. I know you think I'm crazy when I'm saying that. You're already down 12%. Drop to where I think you're going and you're going to be down near 20. It makes that good in big demand, especially if that other country needs it. So these are the things that are happening. And in part, it's been engineered by the president. He's been a bearish fan of the dollar. You know that. So I put all this together for you each morning. That is where I say, buy here, sell there, do this. And I keep a running record of that trade while it's open. I don't publish perpetual track records. I'm not out to manage your money or anybody else's. Please understand that. I'm out to give you trade ideas, follow up on those ideas, win and lose. And we've got a nice thing going, especially in the spiders. We've got a lot of trades on there. We're just coming back into the futures now as the war threw everything out of kilter, and now it's all coming back where the markets had those big swings and things are coming alive again. So if you're interested, that's where I want you to come at. All you do is go to IraEpstein.com, research. Everything you need is right there. There's icons up here. Give them a click. I'll catch up with you in those other videos tonight that I put out. And, of course, first thing in the morning. You take care.